What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we got to talk about this nasty looking market, and I am going to give you my opinion about the outlook and why none of this really matters to me. It's not going to change my game plan. I'll share with you the results of my deep dive. There's some very important information here, and I'm going to try to keep this video as short as I can. Hit the like button and subscribe and turn on your notifications right now because you don't want to miss. I've got a lot of videos coming your way, but I need the support. Smack that like button so this video gets pushed out there into the YouTube sphere. Okay, so let's just start out with the obvious that Bitcoin is way down. Let's jump over to the Bitcoin chart, and then I will tell you what I'm looking at and see if we can make sense of it. Okay, so there's the chart. Here we are on the 1 week chart, and we have this big, fat, nasty red candle falling off of a cliff. There are several reasons why this could possibly be happening. Reason number one is because we were on a steep slope of quantitative tightening, which ends on December the 1st. And of all of the other reasons that I've looked at thus far, I think reason number two has the most credibility in addition to the quantitative tightening. And that is that the early investors of Bitcoin are mega rich and they're cashing out because there's liquidity available for them to take their cash. In other words, if you try to sell something and you've got $1 billion worth and there's no buyers on the other end, you're going to cause the price to go to like zero, okay, like a rug pull. There's not going to be anyone willing to trade your asset at that high price, at that high of an amount. But right now, there's a lot of liquidity. In other words, there's so many people that are still lined up willing to buy Bitcoin. A lot of the early investors are able to sell and get out. I was just watching a video. They were talking about one of the biggest individual Bitcoin wallet holders, just like last week or so, sold out for $9 billion in cash. Now, that person probably does not care if Bitcoin bounces back up to 200,000 or goes to 1 million. How are you going to spend $9 billion in your lifetime? Now, it would be hard to sit on your Bitcoin when you're up that far, where you are able to cash out for billions of dollars. And so what this theory says is that a lot of the early adopters, the people that bought in way long time ago, like a friend of mine did who lives in Kansas City and is a corporate vice president of a big company, he was buying into Bitcoin at 50 cents and then he sold out at $1. But the friend of his that told him to jump on and to gamble with it, well, he's still holding it. So he was spending thousands of dollars, thousands, tens of thousands on Bitcoin at 50 cents. If you held that, well, you would have the option today to sell out for billions of dollars. That might be why we are seeing this dip, because Bitcoin has matured and a lot of the early investors are like, okay, it's time to hit the exits. I'm set for life. As far as what the chart says, it is still bearish. It is still very bearish. As a matter of fact, we've got this stochastic crossover right here. We kept on bouncing up. You know, we had this first run here, okay, and then it crossed over bearish. It came back up. We had another peak. And then we dipped way down when everybody panicked when we had this 10% drop right here. And what did it do? It ran to the all-time high. And so we got another peak right here. Now we're correcting again. And so the big question is, how far is it going to go? I have been talking recently about 75K in the private group, and that's this blue dash line right here, okay? And you don't see a lot of volume on the VPVR at 75K, but that's the first checkpoint because of market structure. And I'm going to explain that. If 75K fails, well, then we'll be talking the red dash line. Yeah, that red dashed line is down there at about 50K, okay? And I just answered a question in the private group where Tatico, shout out to him, was asking, people are talking about this 50K, is it possible? I said it's possible, maybe not as probable as the 75K, but anything can happen, but we'll have to destroy market structure to see a dip happen that great. So here we have it. You have the two double peaks here from the previous market cycle top. And usually the market cycle top on the previous peak sets a floor of market structure for the next run. So you noticed after you had the bear market, we came all the way back up. We repeated the previous market cycle top right there. And then you made a bull flag and then you jumped out of it and we ran to the all-time high. And so at this area where you have double confluence, this is where you have market structure. So picture this like a building. We'll make this blue. You got a building and there's a floor and there's a ceiling. There's several floors. So here you have a floor, okay? And you had a ceiling up here. All right, there's your ceiling right there. So we'll just make a ceiling here. Boom, right there. Okay, so that's a structure that has a floor and has a ceiling. But now we're going to build another story on the building. Now we have a new ceiling up here, all right? And then our structure, our market structure floor is at the previous cycle top. Now, if we fail this, there is still some structure at 50,000. That's where you see these intermediary peaks and the launch point before we really hit into that bull flag. It took a slight pause and then we jumped up. But this structure is not as strong as this structure. So that's why my answer to the question was 50K is less likely because there's tremendous market structure right here. Now, while I'm saying that, I can also tell you this. Let's make it red for this because this is different. If this plays out and we go all the way down here, right? And if this crossover plays out and the oscillators go all the way down here, all right? That means that it could be, if this 4-cycle peak thing is still a thing, even though I only think it is the result of coincidentally falling in line with QE and QT, and I'm going to show you that next. Then yeah, this is the end of the bull market peak. And if this is the start of the bear market, Bitcoin can drop down 87%. It could go lower than that 50 and we could be down at 15K. Now, before you decide to give up and jump off of a bridge, this is probably not going to happen. And the reason is because of the QT and QE cycle that is currently going on, which is going to inject liquidity into the market, where we probably aren't going to go below at least the 50K market structure. And I don't think it's going to go below the 75K market structure. So let me put something new on the chart that I have. And this is an indicator that I dug up. I've been looking all over for it. It's the Fed net liquidity indicator. Let's pop this on and see what's happening here. Now, this red line says when we go up, the feds are injecting money or letting the banks go crazy on lending, and we're increasing the velocity of money, currency supply. When it's going down, that's when the feds, the Treasury, is going to sell bonds and drain liquidity out of the market. So the Fed says, hey, give me $1 billion and I'm going to give you a bond that you can hold for 10 years. And I'll give you a guaranteed 4%, 5% interest rate return on your investment, and your money is safe. So then the big banks and institutions say, yeah, I'll buy one. That looks pretty good. But then they got to pay for it. So then that $1 billion of liquidity comes out of the market. So they don't have the money to lend. They don't have the money to invest in other things because they just invested into the U.S. Treasury. So that's what the direction of the line means. Now, look at this. One interesting thing here that I noticed is that when we had COVID, which 2020, here's COVID right here. That's when we printed more money than any time in the history of the country. That's why you see this big spike right here. Okay, so after they did that, they had a short period of quantitative tightening, and then it opened up the doors again where they printed more. And it just so happens that that coincided with this market cycle top. Okay, so we had this crazy double top probably because we still had tons of liquidity. We hit the top here, had a little bit of QT, but then they unleashed the money again, and that drove the market up. We never had a double peak like that before until this 2020 cycle. And when you see that the Fed started opening up the floodgates again, we got another market cycle top. Now, what I don't understand is we went into quantitative tightening. That coincides with the bear market, and we stayed down here. This bump here probably caused the first leg of the recovery. And then this bump here, going from here to here, it fueled this big leg up. But after that, we just been bouncing around, and we still had this run up. We still had this major top right here. But now you have people saying that we've been in quantitative tightening since 2022, and that's the reason why we see this big fat candle going down right here. Now you can see it's not too long of a period of time right there that we have the QT, quantitative tightening. But now you see here, okay, we're about to pivot. So they're saying that on December the 1st, we end quantitative tightening. That doesn't mean the QE starts right away. I think QE is not supposed to start until January. Now, what will QE do? Well, it could possibly turn the market. How quick will it do it? Well, don't get too anxious, because once they start printing more money and then this little line here, it goes up and they start to inject money into the market, they say that it could take like a year before Bitcoin and stock market prices start to turn around, because it takes a while for the Treasury to buy the bonds from the banks and the institutions, and then the banks start lending, and it's a filtered effect. So that by the time it gets out here to the retail investors, we could be, well, not that far in the future. We could be well into 2026. We're on the 1 week chart, so 2026 ends about right here. The big question is, how low are we going to go before the effects of QT take place? I don't know. I'm looking at 70, I'm looking at 50, whatever the case, I don't care, because I'm not going to get out of the market. I'm not giving up. Now, I wanted to get rich in October. I ain't going to lie. But that doesn't mean that just because we might have seen a blow off peak and that we could be in bear market territory that I give up. I'm 58 years old. If I got to wait another year or two or three, then I'm just going to have to wait. I'm not going to get spooked out of the market. Besides the fact that I only invest what I can afford to lose, and I won't lose it because I'm not selling it. So if you invest and think like Warren Buffett, you'll end up a billionaire by the time you're Warren Buffett age. I'm not going to stop until the day that I'm gone. I want to leave a legacy for my kids, my grandkids, the whole family tree. So if we do get a bear market, that is an opportunity to me. I want to buy stuff dirt cheap. I mean, Swift coin I was buying at 0.002 and it went up to 5 cents. I should have sold it then, but I did not. And that was a lesson learned. Now it's down to 0.0038. I might start the process again. I don't think that it will go lower than what it did during the 2022 bear market. So overall, if it takes a while for the market to rebound, it's given me more time to accumulate. And then the big lesson learned is always take profits in those intermediate times where the market jumps up. Don't be too greedy. Don't sell everything, but take some profits and do it sensibly, okay? Now, on the next video, I am going to post, I'm going to give you my whole report about the institutions and what their projections are, because they're a lot different than what I just told you about 70K and 50K, all right? There are 3 major institutional investors that are saying that 2026 is going to bring us a Bitcoin price of anywhere from 170K to 300K. So we're going to jump into that. And then I'm also going to talk more about QE and QT, and then we'll explain more about the liquidity chart. And then what else did I have on here? Let me pull up my notes here. So we've got the smart money price targets. Okay. Oh, then we're going to talk about the upcoming Clarity Act. And this is the Crypto Market Structure Bill, all right, by Brian Armstrong in the U.S. House of Representatives. So that's all coming your way. And again, like, comment, subscribe. I've got so much to talk about that I'm going to break it up into as many videos as I can. But you need to come back often so you don't miss this, and share it with your friends, okay? A lot of people miss this stuff because YouTube has changed the way that they push out stuff into the YouTube sphere. So I would appreciate your help. That's all I got for this one. This is Carlton, and I'm out.